Good morning, everybody. It's Jeff Fitzpatrick. It's Monday, the 4th of November, and it's morning, so therefore it's time for my video log. A little bit late and a little bit short because this is the day that I do the month-end personal position reports, but nonetheless, I've found some interesting stuff to show you. So let's see what we've got. First of all, I'm going to discuss a couple of points which you might not have thought of. One is about buying stocks or even selling puts, come to that, at high points. That's price high points. The second is being a bit careful about using earnings per share as a measure. And then we'll look at my trades for the week, and I might even have a bit of news for you on other things. Let's go. So here we've got an interesting situation where we have a stock. It happens to be CSTL, which I'm not particularly recommending. I just tried to find an image that would represent what I want to talk about. And what I'm finding is, and what I think most other people are finding is, that when is a stock is at the top of its annual high point, we tend to shy away. We like stocks to be at low points so we can buy low and sell high. However, the fact of the matter is that statistically, stocks that are at annual highs are those most likely to get to a new annual high. And with that in mind, and that's because they're doing well and they've got some momentum behind them. So I'm going to try to be a little bit more understanding of that when I do my selections and not have the price being at an annual low or towards an annual low as such a big element of it. After all, if stocks are towards their annual low, there's usually a reason for it. Interesting. Have a think about it and let me have any thoughts you might have. Okay, and for my second point, got an example here which is CNI, Canadian Nation. I actually think it's a Canadian railway company, but I've only got it to illustrate a point. And that is, if you look at the top blue line on here, that is the number of shares that have been issued. And they are buying back shares. So the number of shares in circulation is going down. The earnings per share, however, is generally tracking upwards. Now, if you reduce the number of shares available and then divide the profit by it, guess what? You actually get an increase in the earnings per share. So you have to be a bit careful. And sometimes it's actually better to look at the profit margin rather than the earnings per share or profit compared to sales. And that can easily be done on this bit of software, which I'm using here. There's a lot more to come on this software, but I think that's probably as far as I want to take it today. I'm leaving it as a tantalizing look into the future for you. And so to my picks for the week, and here they are. I've got one, two, three, four, seven of them, I think it is. Be careful of AMAT. That's got earnings juice. So if you're selling a put, then you want to do it so that it expires before the 21st of the 11th. The others, the earnings dates are reasonably well out. So where do these come from? First of all, some of them come from the 4x4 list from TICN. Some come from the value line filter, which is a score of 1, 2, or 3 for both safety and timeliness, and a score of B plus for financial strength. But some are also coming from Better Investing and Stockmaster, and also from Zacks, which are other screening operations. And then I'm cross-checking them. So the ones that come in through Better Investing, I'm looking at on Value Line. The ones that come in on Value Line, I'm looking at Better Investing, and so on. So I am actually now filtering through all sorts of different ways to get the very best stock that I possibly can. So these don't just have good charts. The charts get looked at too. They've got good charts. They've got good steady progress on growing sales and earnings. They've got good fundamentals and they've got good fundamental sound financial health. So they're my picks for this week. However, of course, I am waiting for the election, so I won't be trading these today. And I should also note that I'm now trading some very short-term trades on stocks. Some of these may well go into that. I'm also looking at short to medium term, so basically about 3 months on stock holdings. And I'm also considering looking at some longer term buy and holds on particularly high dividend paying stocks. However, that will be very few of them because even with a fantastic dividend of what 13 or 15% per annum, that doesn't make them outpace the ducking and diving that we can do of getting into and out of stocks, getting in at the lows, getting out at the highs, and so on. But there they are. Um, Still looking for new members for Young Stars. I have my kids' children in, so my grandchildren are all in this, and this will make a huge difference to their futures. We've got plenty of time to make a lot of money for the kids, and I'm now thinking of amalgamating it with Fortune so that the young ones get access to the more lucrative put selling trades. The Facebook group is going well. If you're not already in it, please search for the Facebook group, the Extraordinary Stock Trading System, and it'd be good to have you on board. If you're not already a member of one of our investment clubs, check out myinvestmentclub.co.uk or get in touch with me. I can show you how it works. You don't have to put a fortune in. It could be £100 a month. It could be £100,000. It's whatever is good, whatever you can afford. Only ever put in what you can afford. But you'd be very welcome. And that's it for this week. As I say, short and sweet. Oh, one other little thing. Just to mention that the Dow have now dropped Intel and put Nvidia in its place. That could be, in my mind, what I call a Kodak moment. You might not know that some guy at Kodak invented the digital camera, but the board poo-pooed it. They said, oh no, we don't want to get into that. Their main thing in life was selling photographic paper. Kodak lost a fortune and eventually disappeared off the planet. Intel also had the opportunity, I think it was, to buy Nvidia at an early stage. And the management there, the directors, the board said, no, I don't think so. They may well be regretting that now. But let's see what happens to Intel in the coming months and years. Thanks for listening. Talk to you next week.